Accounting is the process of measuring, processing, and sharing financial and other information about business and corporations. The accountant must follow the generally accepted accounting principles (GAAP) or the IFRS, known as International Financial Reporting Standard Principle. Finance is defined as the management of money and includes activities such as investing, borrowing, lending, budgeting, saving and forecasting. There are three types of finance, which is personal, corporate, and public or government. Financial accounting is like a GPS that guides users through the land of finance. It's a systematic process of recording, categorizing, and communicating summaries of the company, transaction, and performance. This is important for internal and external users, such as creditors, investors, and regulations bodies. Next, we move to the background of the company. YTL Corporation Berhad is an integrated infrastructure developer with extensive operation in countries including Malaysia, Singapore, United Kingdom, and other with 18 billion ringgit Malaysia of assets. The core business of YTL Group includes utilities, construction contracting, cement manufacturing, property development and investment, hotel development and management, e-commerce initiative, and internet-based education solution and service. Meanwhile, Gamuda Berhad is a global engineering, property, and infrastructure company that provide innovative solutions and deliver sustainable development. Their mission is to deliver innovative infrastructure solutions in premier townships for their stakeholders through their core business in engineering and construction, property development, and infrastructure concessions. Thank you.
Hi everyone and welcome to my channel. Today we are going to take a deep dive into the financial ratio of two Malaysia's biggest construction company. The first one is YTL Corporation Berhad and the number two is Gamuda Berhad. We will be looking at the liquidity, efficiency, profitability and leverage to see how they stack up against each other. So buckle up and get ready for a numbers game. Liquidity ratio first. Let's talk about liquidity. This is how well a company can meet its short-term obligations. YTL Corporation Berhad has a current ratio of 0.37, while Gamuda Berhad has a much higher ratio of 1.33. This means Gamuda has a more current asset to cover its current liabilities, giving them a stronger short-term financial position. We can also look at the quick ratio, which excludes less liquidity assets like inventory. YTL's quick ratio is 0.34, while Gamuda's is 1.27. Again, Gamuda come out on top, showing they can more easily pay off their current liabilities with their most readily available assets. Efficiency ratios. Next, let's see how efficient these companies are using their assets. YTL Corporation Berhad has a total asset turnover ratio of 0.33, while Gamuda Berhad has a ratio of 0.25. This means YTL is generating more revenue per unit asset compared to Gamuda. But when we look at the receivable turnover ratio, which measures how quickly a company collects customers' payment, Gamuda take a lead. Their ratio is 2.34, is higher than YTL's 5.75, indicating the Gamuda is more efficient at collecting their debts. Next, I will pass to my friend to explain about profitability ratios and leverage ratios.
I'm going to elaborate the profitability ratio and leverage ratio. There are two parts in profitability ratio, which is profit margin ratio and return on common shareholder equity. For the profit margin, Gamuda clearly outperformed YTL. Gamuda profit margin is 0.1705 or 17.05%, whereas YTL profit margin is 0.0487 or 4.87%. This means that Gamuda Berhad is keeping a larger portion of its sales revenue as profit. And when we look at the return on common shareholders' equity, which is measure how well a company is generating profit for its shareholders, Gamuda again come out ahead with ratio of 0.0846 or 8.46% compared to YTL 0.0697 or 6.97%. This signifies Gamuda generates better returns for its shareholder per unit of invested equity. Lastly is leverage ratio. Let's see how much debt these companies are using to finance their operations. YTL Corporation Berhad has a debt to asset ratio of 0.76, while Gamuda Berhad has a ratio of 0.49. This means YTL is relying more heavily on debt than Gamuda and potentially increasing their financial risk. Next, debt to equity ratio. Similarly, YTL's debt to equity ratio 3.12 is higher than Gamuda's 0.976. This further underlines that YTL has heavier reliance on debt compared to Gamuda, where they have a more cautious financial structure. So, who wins the ratio race? Well, it depends on what you are looking for. If liquidity and short-term financial strength are your priorities, then Gamuda Berhad is the clear winner. But if you are more concerned with efficiency and profitability, then YTL Corporation Berhad might be a better bet. Ultimately, the best choice for you will depend on your individual. Thank you.
Now, we will go through into the financial performance of YTL Corporation Berhad and Gamuda Berhad. We are going to analyze key areas for improvement and growth. Let's start with YTL's. We need to address its weakness compared to Gamuda. There are three segments that YTL need to improve, such as current ratio, profitability ratio, and leverage ratio. Firstly, for the current ratio, they can either boosting current assets or reducing current liabilities. Firstly, enhancing assets. They need to sell slow-moving inventory by free up cash and improve liquidity. And then, they can invest in profitability ventures by expanding revenue streams and build long-term value. Second, reducing liabilities. They need to repay the debts strategically to prioritize high-interest loans and negotiate better terms. Raise equity capital, such as inject fresh funds without increasing debt burden. Next, the second segment is profitability strategies. YTL profit margin needs a boost. We can achieve this through two main approaches. First approach, we need to increase net income, drive revenue growth through expansion, diversification or higher sales volume. This can implement cost-cutting measures to improve efficiency and profitability. Second, optimize net sales. They need to raise price strategically for select products or service and offer targeted discounts to attract customers or retain existing ones. For the third segment is leverage ratio. By balancing debt, YTL's debt to asset ratio is higher than Gamuda's. Let's focus on debt reduction. On debt reduction, they need to repay loans systematically or refinance at lower rates, issue equity to raise capital and leverage the balance sheet. Second, assets growth. They need to seek strategic assets or invest in promising ventures, enhance production and efficiency of existing assets for better returns. That's all from me. Thank you.
Moving on to Gamuda Berhad. While Gamuda boasts a healthy current ratio, there is room for improvement in two key areas. Number one is total asset turnover. This reflects how efficiently they utilize their asset. To boost it, they can reduce average total assets by selling idle assets or optimizing inventory management. The first one is increase net sales through market expansion, product enhancement, and price adjustment. Number 2, weaken account receivable turnover. Faster collection, improve cash flow. Gamuda can achieve this by building stronger customer relationship and ensuring efficient communication. Implementing late payment penalties or early payment incentive. In a conclusion, both YTL and Gamuda have unique strengths and challenges. By implementing these target strategies, YTL can enhance their liquidity, profitability, and debt management, while Gamuda can optimize asset utilization and acceleration collection. By focusing on these key areas, both companies can unlock their full potential and sustainable growth and success. Thank you so much.